Hello everyone, so welcome to Introduction to Managerial Accounting, and in this case, today the topic is the difference between financial and managerial accounting. In order to understand that difference, then we have to understand that they have two very different roles when it comes to the role of accounting in a business. So, financial accounting, what is it? Financial accounting is typically information that is reported at fixed intervals. So that means we do it either monthly, quarterly, yearly, and so on. And typically we follow the general purpose, which is the financial statements we create. And therefore, that means that most of these documents are actually legal documents. A lot of times you have to submit them to your stakeholders, or you have to submit them to the government or to the owners of the business. And therefore, these documents are very precise on the way that they must be made, and there's many laws that govern what you can and cannot do. Managerial accounting, on the other hand, a little bit like the name says, is more using accounting for management purposes, and that means that the role here is to provide information and reports for managers to use in operating the business. What does that mean? It means that I have a lot of flexibility to create different reports in order to help me better understand some decisions that I want to make in my business. Now, the goal here, therefore, is to help managers. And so we know that now there are two different types of accounting: financial accounting, which is what we see in the traditional accountants do, and managerial accounting, which is there to help managers do their job. So the job of a manager has many roles, obviously, and before I go any further is just to understand that the job of a manager has five main tasks when you are a manager. You have to plan stuff, and planning stuff means that you have to prepare sorts of actions that you will do in the future. You have to direct, in other words, to transform that plan into reality. We could also call directing leading. We have to improve, in other words, that the job of a manager is to make things better with every cycle that it takes in the business. We have to also control. That means making sure that what we are getting versus what we planned is in line, okay, or even better than what we planned. And finally, the job of a manager as well to make decisions. And therefore, that means that you are responsible for many of the decisions you have to take, and therefore you are also responsible for the consequences of those decisions. Now, when it comes to operating the business, okay, therefore, I have here on the right hand side, I have there a little diagram that explains this. So operations, in other words, the things that we do every day, will generate results, and those results will help us improving, and improving will help us get feedback for planning, that creates plans for directing, that will help as well, obviously, in decision making. All this helps in decision making, and directing will always create actions that allows us to improve our operations. In the middle of all this, we have controlling, which is not a negative word. Controlling is simply see what we said we would get. Are we really getting? Is it really the results we're getting? And then therefore we get feedback to measure what we plan versus our realities. So in terms of managerial accounting, I mean, there's many things that we can use, but in reality, managerial accounting creates reports to help managers make decisions. Things, for example, like calculating the cost of manufacturing a product, okay, or comparing the cost of manufacturing products over time. Was it cheaper last year to produce the same product that it is this year, for example, or performance reports, or a report that could analyze potential efficiencies and save purchasing a new computerized system, for example. But at the end of the day, it's always about the same thing, which is saving money and help us become more efficient. The next part is to understand that there are different types of business. Okay, typically there is three types of business, and I want to explain them now to you. The first one is called the services. So services is basically when we have a commercial enterprise that provides work, or it provides an intangible good, something that is not a real product. For example, hotels provide an intangible good, which is a night of sleep. But it could also be, for example, education. This video as well is an intangible good. It is therefore a service. Then we have retail. Now retail is a commercial enterprise that sells goods to consumers or businesses, but that does not mean that they actually produce it. Okay, so they just sell. They buy products already produced and then they sell them. And the last one we have is manufacturing. And manufacturing is a commercial enterprise that transforms raw materials into finished goods. And I have here the example of, for example, this factory. Now, typically what we do is when we are doing When we're learning about managerial accounting, we tend to start with manufacturing for many reasons. It's actually a little bit more complicated than the others, but if you understand manufacturing, then you understand all the others. And this is a major advantage that we have, and therefore that's exactly what we're going to do. Now, for this example, I'm going to give the example of a factory that produces purses. Okay, so the process is very simple. A customer places an order, and then let's imagine it's customized purses, and therefore the customer places order for a certain quantity of purses that will be later on sold. And we have our raw materials. In this case, we have some lining and we have leather. Then the materials go into the cutting department where someone molds them into shape. Then they go into sewing department. And finally, I have my finished purse. And in the middle of all this, obviously, I have my factory that has some things that affect all the departments, providing electricity, providing, for example, cleaning services, and so on. So, okay. On this small video, I just wanted to introduce you to the fact that indeed there are two different types of accounting, which is financial accounting, the typical accounting that you know, where we create the documents for the government, and managerial accounting, where we create the products for the reports for managers. Then we also learned there are three different types of businesses: services, retail, and manufacturing. And on the next video of this mini-series, we're going to keep working with this leather shop that I was talking with you just now. All right, thank you very much, and I'll see you on the next video.